Good morning and welcome to the Naples Money Managers News You Can Use. I guess most of you know me by now. I am Dawn Litchfield Brown, and I think you recognize this nicely tanned gentleman over here, Dennis Nelson.
I have been getting some tan.
I can see that. You're making me look like a ghost. That's not good.
We need to get you out on the boat, out on the water.
That sounds like fun, with 50 sunscreen and a lot of clothes.
Oh,
No. We went in the convertible this weekend, and I had, like long sleeves on and up to my neck. I don't want a farmer's tan. Anyway, we have a lot to talk about today. The market was a pretty scary place last Friday.
It was
and
indeed.
We opened up down today. I'm going to talk about taxes, but I think I want to talk about it in light of the conversation we're going to have about the markets and what we think and what we're doing. So I'm going to let you go next.
Well, that's a big subject. What about the markets, right?
Mm-hmm.
Well, if you really look at the big picture, the big picture, you have to talk about money supply and interest rates. And that's what the Fed is wrestling with right now. How do we control inflation? By manipulating the money supply and interest rates. And most people have been focusing on interest rates. I don't know. To me, moving up to a 5% mortgage, which is exactly what I paid in 1966 when I bought my first house. 5% doesn't seem too bad, and yet it seems to have everybody worried about the housing markets and how much they're paying. And of course, there is a marginal effect there, but what's really happening is the Fed is cutting back the money supply. To go back a little bit,
Yeah, to explain what that means too.
Money supply is the total amount of money that people can get their hands on relatively quickly. So it of course includes cash, and we're talking on a national level here. The national level of cash out there. The amount of money in T-bills, the amount of money in CDs, amount of money in savings accounts, money that is readily available.
But not stocks, even though you can get the money in 3 days. That doesn't count your investment portfolios.
That's correct. So before the pandemic, at the end of 2019, the money supply was around $4 trillion.
Small number.
During hard to really conceptualize a trillion, but there was a trillion of them out there, a trillion $1 bills. But during the pandemic, over the next 2 years, the Fed expanded the money supply to prevent us from going into a recession by $2 trillion, up to over 6.1 trillion.
So how did they do that?
They did that by buying bonds back from you, the investors.
You had $1,000 bond, or let's call it a $10,000 bond, because nobody really wants a $1,000 bond. A $10,000 bond, they would buy it back. Let's say it's a government bond, right?
Assuming it's a government bond, they would call it.
They'd call it away from you, buy it back, and you'd end up with $200 or whatever it happened to be in your hand, cash. So that's how they put cash into the system.
That's how they put cash in the system. Now they're going through the opposite effect. They are selling bonds, and in order to attract people to buy those bonds,
sure,
they have to raise the interest rates. So that's really kind of the dynamics of what's going on. So at this moment, right now, monthly, they are taking out $100 billion a month.
So basically what they're doing is they're making an offering of a new bonds, and it's going to be $100 million a month, and you as the investors are going to buy those bonds. So now you are short. You have $100,000 the government has in cash that you don't have in cash. No. You have it in a bond. So that's kind of the in and out of the money.
That's right. So you've got $100 billion less this month than you had last month to spend on stuff. And that spending on stuff is what causes the inflation.
Right. So now they're taking it away.
They're taking it away.
Right.
And $100 billion a month, I mean, you're talking $1 trillion over a period of years.
So why is this making the market go oddly crazy on Friday, I thought?
Well, I thought so too. Nonetheless, people are seeing less money out there, less impact on the economy, and a tightening of the economic.
Yeah.
The whole economy is going to tighten down because of the lack of that money. Now there's still a lot of money out there, so I'm kind of not that.
You're not in that camp.
Well, I'm definitely a supply sider. Those of you who were around in the '70s remember a lot of talk about this money supply. Well, we haven't talked about that for a couple of decades. We are again, and we're talking about it because it's right. The supply of money out there is going to dictate how much the inflation is.
That sounds right. So what do we do? Here's my thoughts on what do we do with our portfolios. People are still looking at their portfolios, whether they be our clients or someone else, and they're saying, oh my gosh, we dropped 1,000 points at some point on Friday, closing down 902, I think. And I don't know what today was, down a couple hundred this morning.
Well, we're down 300 right now.
Down 300 right now. So it's the wake-up call. Whoa, what do we do? And I personally, nobody likes this. I don't know why, but I would be going through my portfolio and taking losses. So that not the same as selling, even though you're selling to take the losses, because people just paid a ton of tax for 2021. We've had more people call about all the taxes they paid, and now they've lost a lot. So if you sold and you took your losses and bought back a similar, so let's say you sold Kimberly-Clark and you bought
International
paper. So you have two good qualities, but you took a loss on one that you can use if down the road this market really picks up. This doesn't feel like a bottom to me. I mean, like a breaking through the bottom, even though I know we're pretty low.
Well, this doesn't feel like a collapse.
There you go. That's the word.
It doesn't feel that way to me, but it definitely feels that at the margin, things are going to tighten up. And in that case, the high growth stocks will grow less. And the lower growth but steady stocks will probably still stay low growth but steady. So we're seeing a movement in stocks away from growth stocks to what we call value stocks.
Right. So you have to look at your portfolio and say, am I living off of capital gains? And if you are, then you have a concern. If you're not, and you have a strategy like we do with our Mapato double income strategy, then you have good stocks. They're going up and down like a value of a building would go up and down, but you have that rent money coming in every single month, and that's what's really important. So think about your taxes. Look at your portfolio. Do you recognize the things in your portfolio? If you don't, call Dennis or Marcus or John or your investment person if they're elsewhere and ask them about them. This is Money Matters. Most of all, most importantly, you matter. Make it a great week.